Just changing screens. Hopefully you can all hear me loud and clear. Just move the chat box out of the way. There we go. And I've actually remembered to click my microphone on. Wonderful. I've actually moved away from, I was on the pound Aussie, but just for a change of scenery, I've actually moved over onto the Euro Aussie, which one I've been flicking backwards and forwards to since we, just adjust my microphone, sorry. Since we got up early doors about 6 o'clock. So it's been tracking up. There's been quite a bit of Euro buying and partially driven by Aussie selling. In fact, if let me go to the matrix first. Pull that up first. Let's have a look because I've isolated it out there. There we go. This is on the currency matrix. This is on 1 minute. This is on 2 minute. This is 5. I think no 3. Sorry, beg pardon, 4. So I've got 1, 2, 3, 4 basically. So these are the faster timeframes. And of course, as always, we've got the London Open. What we're looking for is volatility, two things: volatility and the possibility of trap moves, because that is typically what generally happens around the London Open, 8 o'clock. In the run-up to the London Open, you'll often see trap moves developing in preparation for it, and then it duly triggers 5 minutes, 10 minutes later. So we're always conscious of looking for, at the very least, volatility and reversals, but also coupled with congestion as well. Up at the top here, you can see we've got the Euro Aussie is now dropping off a bit. It was up at the top here. It's actually falling away now. So 5 minutes ago, it was up here. We've still got decent Euro buying. In fact, if I go onto the currency array, let's pull up the currency array. There we go. This is slightly slower time frames. This is on 5 minute, this is on 10 minute, this is on 15 minute. And you can see the pairs that are driving at the moment. We've got Euro Aussie at the top, we've got Euro New Zealand. And what this is telling us is not only about the strongest trend that's in place at the moment, but also in the context of universal sentiment towards that particular pair. In other words, is the euro in this fast time frame, is it being bought or sold universally? And if it is, then we expect to see all the euro pairs above the midpoint line of 0, if you will, which we have. So the market broadly is buying euro. That's on the fastest time frame, and obviously what we're looking for is further confirmation of that by all of these moving up here. Now, if these start to drop away, if euro yen, euro dollar, they start to fall below the midpoint line, if you like, and start to fall into negative territory, in other words, they move from bullish into congestion and positively bearish, then what that is saying is that potentially you're going to see that reflected in the Euro Aussie, and vice versa. If these start to continue higher and sweep up, and basically what the way this behaves, it's very much like a windscreen wiper on a car, if you will, where you're seeing, or a radar, if you've seen a radar system in operation, it's this constant sweeping process. So you're either seeing these all sweep to the upside, or you're seeing them sweep to the downside. You're seeing the strength, which is the strongest one, which has the strongest trend, Euro Aussie at the moment, closely followed by Euro New Zealand. So you're seeing all of that. You're seeing universal sentiment in the indicator, but what you're also getting is a sense of, on this second column here, of whether the currency pair is actually approaching an overbought state or an oversold state at the bottom. And the way it does that is in two ways. First of all, it colors them in this combination of a darker blue with the OB signal in brackets. And as it potentially reaches an overbought state, it will go to bright blue and the brackets will be removed. So again, it's another, there we go, there's one sort of flicking on and off there very, very quickly. So what it's doing is it's giving you a sense of many different things, of sentiment in the complex, in the euro complex itself. It's telling you which are the strongest trends. It's telling you whether, it's purely from a visual perspective, whether these currencies are all moving in the same direction, whether that sentiment is strengthening or whether there is a weakening. Because the other aspect of currency trading is that what you see constantly within a complex is a rotation from one particular pair into another. So as you see potential strength developing on one currency, once that particular currency maybe reaches a pause point, you'll see that buying reflected in another of the pairs, and that one will take over. It's almost like passing the baton, if you like, in a relay race. It's that sort of concept. So as these currencies move and then get to pause points, you'll see others joining. You can see, literally as I'm talking, you see the Euro New Zealand is flicking up a little bit. So there's a bit more buying coming into the Euro New Zealand. It's pushing up, it's pushing up. The Euro Yen, I think it was maybe down here at spot 12.13 a minute or two ago. It's trying to push up. And obviously the full house, if you like, the perfect combination is where you've got all of these ranking together. You know, they've all pushed right to the top. And then what you're looking for, of course, if you're looking for the potential for a reversal trade, because at the moment, these are currently in a trend phase. So if we go back onto the chart itself, there we go. This is what's happening. You know, we're at a pause point. And if we look at it now from a VPA perspective, this is very quick. This is 15 second. This is 1 minute, slightly slower. This is up onto the 5 minutes. So if we take the 5 minute chart, just pop that up full size, you can get a sense of what's going on. Now, what are we seeing right now? Let's pull this over so it's a little bit larger. There we go. This is the beauty of Ninja as opposed to both MT4 and MT5 is that it actually prints your local time on the chart. So it's very easy to pick off where you are in real time. You don't have to worry about a 2-hour lag certainly in terms of the time frame print. So this is 7 o'clock. This is Europe getting underway. We have this extended congestion phase throughout Far East and Asia. This is overnight our time. Big move to the downside, lots of volume in there, volatility trigger, into congestion, and into congestion we've got the volume point of control. We've also got a huge support platform here. This blue dashed line, this blue dashed line, and also this red one. Anna was talking about levels and flow. This is the equivalent to support and resistance on NinjaTrader, slightly different from that on MT4 and MT5. On MT4 and MT5, you get the dash line and you get the solid line, which indicates a stronger area. And of course, those can then develop into clusters. What the accumulation distribution indicator does is it presents these lines in varying thicknesses. And the reason it does that is because it's telling you instantly which ones are stronger and which are weaker. You might not be able to see the little numbers down the side here. This one's been tested 7 times. This is a single episode. This is 3. This is 2. So each time a level is tested and holds, it is captured, if you like, in the algorithm and increases the thickness of the line accordingly. And therefore, you get a visual display of strength and weakness from a price-based perspective. Now, obviously, as we broke away here, we had not only the price-based levels here, we had this darker, this wide blue one and a red one here. So we've got a cluster of platforms here of support once it's broken through. We've also got the volume point of control as we break away. And then what you're looking at is the support and resistance from a volume-based perspective, which is where we look at the histogram up and down here on the right-hand side. And as you can see here, this low volume node, the price sprang through there very quickly. It also sprang through with very good volume. And that is what you expect to see, because as you move into areas of volume-based support and resistance, they work in exactly the same way as price-based support and resistance. So we are constantly analyzing the volume histogram, not just in the time frame we're trading, but also in the faster time frames and the slower time frames, in other words, upstream and downstream. Because you want to identify areas of high volume where price is likely to congest. Equally, you want to identify areas of low volume where the market is likely to spring through pretty quickly. And as you approach those, that's what you want to see, because if you're trading in that direction, then if you're coming to a low volume node, all things being equal, the volume required to drive through that region, in other words, the volume down here, will be that much less than is required to drive through these very heavy areas of volume, which are basically concentrated regions where there are layers and layers of orders which are sitting there. There are traders trapped in positions there. In other words, I'm trying to think of an analogy, but you can think of it as a packed shopping mall, if you will. It's packed with people Whereas opposed to perhaps in today's environment where, you know, the shops are just reopening, you've got very light volume, which would represent this area. So it's really looking at it from that perspective. And then obviously what we're looking at here also is the volume and price relationship, the linear volume price relationship as we look up and down the chart. We can see here on this particular candle, got a lot of volume going in. It's no great surprise. We had an uplift in volume prior to London Open. Now we've got the London Open. Now we've got a ton of volume coming in, which is what we expect to see. The market's tried to rally, lots of volume driven in there. We had weakness here as well, wick to the upper body, decent volume under that one. Another repeat of that. We've got an effort to rally. Lots of volume going in, but it's not really going anywhere. So it's looking pretty weedy at the moment. So we just have to wait and be patient. The trend itself is still maintaining bullish momentum. You can see here the trend monitor. And what the trend monitor does, it gives you that confidence to stay in the trend when you get to these congestion phases, because the biggest problem we all face as traders, let's face it, you know, no one is immune, is that once you have a decent chunk of profit in the particular position and it starts to move against you, that is when you close out. And ultimately what happens is you end up with a lot of small losses and a lot of small wins. So your trading account doesn't actually move forward, it just stagnates and generally sort of declines slowly because you're paying commissions and you've got to, you know, that's the way it works. So this is the hardest thing to do in trading, is to sit through congestion, wait for the trend to develop further, because the chances are if you close out early, you're just going to sit there with trader regret, because the way the market is constructed is to make you fearful the whole time. It's all about fear, this business. It's not really about anything else. It's the market trying to shake you out of good positions. It's trying to frighten you with volatility. It's triggering the fear of missing out when a market moves quickly. It's all about fear, and of course the opposite of that is greed. You know, we are all greedy, we all want to make money. It's as simple as that. So we're just waiting, we have to be patient, we have to wait and see what happens. Let's just have a look, check in on the currency strength indicator. Move down onto 10, slightly slower time frame. Similar sort of picture. We've had, you know, we've got a wick to the upper body here, so there's a bit of weakness coming in. We had weakness coming in here. We're trading around the volume point of control anyway, so we're expecting some congestion. But what's interesting about the 10-minute time frame here is we look at the histogram, and just pull this down a little bit. There we go. We look at the histogram, and this is falling away. So from a trading perspective, that's good news. If we're trading long, then all things being equal, the market should find this relatively straightforward to trade through this region, because there's very little in the way of volume to present a barrier to that move higher. I'm just eyeballing what's going on in terms of the very fast time frames. This is 15 seconds, not suggesting you move to this, but the principles are identical. It's exactly the same. We've got the volume point of control. We've got a very, very well-established potential platform of support here, which has come into play. We broke through it. It was resistance. Now it's support, obviously. We're looking at the price action, the volume. That looks good. That's fine. We're moving up into a, you know, the volume here is falling away constantly, so we're moving up into a low volume region the whole time. So we should continue higher through that with relative ease, all things being equal. You can see the trend monitor here. On this occasion, we went straight through from red to blue. There was no transitional phase. Here we've got some transitional choppiness. Now we're starting to come out the other side into blue. As I highlighted earlier, no change here, and you wouldn't expect to see it down here on 10 or indeed down onto 15. Let's just go to the CSIs and see where we are. We've got multiple currency strength indicators. Here we are. This is what's going on right now. So we're on Euro Aussie there. And the nice thing about that trade is that this is on 10, I think. There we go. That's 10 and 15. The nice thing about that particular trade is we've got both sides of the equation are driving with equal strength. In other words, we've got decent buying of the euro, nice rising, it's not rising vertically, but it's rising strongly, a nice inclination to the line, because what the CSI tells you, so many different things, not least the strength of that buying in the euro. It's strong at the moment. It's strong at the moment, and equally the selling in the Aussie is equally weak. So we have a perfect combination. The pairs cross, or the currencies cross rather, and that trend continues. Now what we're seeing over on the very fast time frames is we're seeing the euro is starting to flatten. It's got up into overbought. Equally, the Aussie now is down into oversold. So from a pure scalping perspective, as opposed to someone over here who is on a 15-minute, what they will be looking at is, yep, okay, we can see the euro, it's deeply into overbought. It may carry on for a little while, but it's certainly looking from a faster time frame perspective to have reached a potential pause point. Possibly from a scalping perspective, we will get a congestion, we will get a reversal play, because again, it's one of the things you have to decide for yourself. Are you going to trade a trend? Are you comfortable trading a trend? The advantages are you get into a move that's already underway. Your stop loss can be that much tighter. The trend is moving. You're jumping on a moving train, in effect. That's the analogy I always use. The train has left the station, you're jumping on board, and off you go, and it's already got some momentum. Whereas opposed to a reversal trader, patience is required. If you look at the setup that's developing now in terms of euro Aussie, we've got the euro up here, we've got the Aussie down here, we've also got the Canadian's selling off pretty strongly. So you might consider that as a preferred opportunity. You would obviously go to look at the chart, but in terms of that potential development of that move, there is nothing in the playbook to say that this euro is going to roll over nicely for you and just continues right the way down to the bottom. And at the same time, the Canadian dollar or the Aussie dollar is going to reverse and come all the way up to the top in a nice, straight, smooth run. And that's it, bank the money and on to the next one. It doesn't work like that. It may happen like that, but alternatively, what often happens is this will flip-flop around up in the congestion phase, as will these two. They will flip-flop around down here at the bottom for a while. And the net result of that is that you have to lay out more money on the table in terms of your risk profile. In other words, you've got to put a much wider stop loss in to allow for the progress of time, the buffering that's going to go on, the congestion phase that's going to duly build, and then ultimately will roll. But roll they will, because currently the Forex world is one of mean reversion. In other words, no currency ever stays overbought or oversold forever in whatever time frame. They are constantly in this state of flux of moving from overbought to oversold and back again. It is, in a way, it is almost the perfect market for this. That is really what the Forex market is about. It is this constant search for strength and weakness, which goes on from the seconds through to the dailies and the monthlies. And it's this constant flow, going back to levels on flow. You're looking at levels. A currency or currency pair reaches a level. There is a flow in a further direction, and then the flow changes and it moves in another direction and reverses and moves back in the opposite direction. And really, that's what this business is about. Let me pause there and pass back to Anna.